and really delighted to have Vandana Harris, founder and CEO of Vanda Insights, Peter Maguire, CEO of XM Australia, and inshallah, as they say in our neck of the woods, there he is, Valerie Chow from Wood Mackenzie in Singapore. And we're looking at our sort of general narrative here, the outlook for the year ahead, 2023. We've heard a lot about China already this morning and India, and we want to get a sense of the wider Asian region. And the one of the questions we're tackling in this session is, how long will we see these new global energy trade flows last? We're seeing a lot of Russian oil coming into Asia, into India and China in particular. We're going to probably see some Russian products come in the new year with the embargo from Europe starting on February the 5th. And what will be the consequences for the international oil markets? So Asia looks like it started the year with an incredibly positive outlook. The MSCI index already at a 20+% rise, bull market from the low. We've got just even today, most equity markets in Asia with green arrows up. We even have inflation reversing in Australia, which might be a bellwether for what we might see elsewhere. So, but generally it does feel like the narrative opening the new year across Asia is very, very positive. Let's kick off with Vandana Hari for your opening thoughts for the wider Asian region. We saw in 2022, Vandana, of course, the big tug of war between supply tightness and demand destruction concerns. Where do you think we start 2023 with those two elements within the context of the Asian outlook?
Morning, Sean. So in terms of the big picture for the oil markets, and let us keep in mind here, of course, the Asian economies, most of them heavily oil import-dependent economies, and very, very sensitive to higher prices, that especially the ones that we saw last year. So the overarching picture, of course, is a look at what is in store for the global economy, and on a secondary level for the oil markets, and certainly for this region, what is the fate of the Chinese reopening? Now, just looking at the Asia-Pac region, things are looking up, as you mentioned, that China is reopening. Now, of course, we all know that it's been a very difficult transition period for them, but could things start looking up, let's say, in the second quarter of this year, as just the wave of COVID dies down? Hopefully, China manages to vaccinate more of its elderly population, and a big impact of the opening that has happened since December, and of course abrupt and ill-planned as it may be, is that the Chinese tourists are traveling again. And so again, keeping in mind that this region, especially the Southeast Asian region, is very, very closely connected with the fortunes of Chinese economy, and they depend, quite a few countries depend on Chinese tourism. So there is a lot to look forward to. There's cautious optimism in this region that the Chinese economy will get back on the rails. I personally feel that could happen as early as the second quarter.
Well, on that point, Peter Maguire, sitting in Australia and looking from the perspective across the Asian region and this whole point of China reopening, what it might mean for Asia as a whole, we're seeing some warmer tones of rapprochement between Australia and China, while at the same token, just in the last day, we're seeing the Chinese reacting to Japan and South Korea's decision to require COVID tests, and now they've reciprocated and blocking visas for South Koreans and Japanese to go into China. Peter, your thoughts as to where the wider region goes with the reopening of China and what it might mean?
Well, good morning, Sean, and greetings from Sydney to the panelists. Delighted to join you. First off, I think it's a positive tone, Sean, and that's been demonstrated with the way this market has reacted across base metals and certainly equities this year. We've had a very nice move to the upside, and by the looks of it, that momentum may continue. We're waiting to see how tomorrow night goes as far as the release of those CPI numbers, but the overall mood seems to be one of positive tone. And from a tourism perspective, certainly Australia's opens its doors, and also opens its doors to students from China, which with first semester starts in only about 5 or 6 weeks away for universities. So that's a positive mood. And then the other side is that the overall, I think, consumption for energy, for base metals, and for the commodity sector is going to be stronger. So that's a good sign for producers, and the overall economy, I think, will do reasonably well out of it. Quite softness across Eurozone, softness going to continue in USA, but China may do quite nicely out of it with a reasonable GDP number.
Let's welcome Valerie Chow, sitting in Singapore, of course, as mentioned, with Wood Mackenzie. Valerie, you watch the LNG markets pretty closely. I think that's one area of which there could be quite an impact this year, given that China was pretty much out of the LNG market last year in 2022, except for their long-term contracted obligations. They took their 60 million tons or so of LNG, but the other 25-30% that they had taken in pre-COVID, they did not import. They could come back to the market this year, which would put a lot of stress, you would think, on the LNG price and so on other Asian consumers. Your thoughts on the impact for LNG in the year ahead with China reopening?
Yeah, thanks, Sean. So I think the first thing to say about China is clearly, obviously demand for LNG took a massive hit last year, right? Almost unprecedented hit globally. So China lost about 15 million tons of imports last year in a single year, and that's almost virtually accounting for all of Asian demand decline. I think going forward with the reopening, we still see potential, obviously, for greater demand going forward. So we see something in the order of 5 to 6 million tons of additional demand. So that would take China back up to about 70 million tons. But it still doesn't replace the highs from 2021, which they had kind of surpassed the kind of 80 million ton mark at that point in time. And the reason why we are a little bit cautious about our demand outlook is, well, China's not out of the woods yet in terms of its economic growth, right? The property sector is in a slump, and yes, there's maybe a bit more economic recovery, but I think we also need to think about the alternatives that they have. LNG, even at current spot prices, remain, let's say $25 plus, remains incredibly high, and it's difficult for them to actually effectively blend those kind of prices into the domestic market. So that's kind of one issue. I think the second one is also they've been ramping up domestic supply very, very aggressively over the last few years. We expect up to about 12 BCM of additional kind of incremental domestic gas supply coming out from both the domestic basins, and that's going to feed into curtailing, I guess, any incremental LNG demand. On top of that, they do have the option of importing more gas via the Power Siberia 1 pipeline from Russia. So if you add all those things together, we are cautiously optimistic, and we think that 5 or 6 million tons is just about right, with maybe some potential upside should there be. So
that won't put a lot of stress on the other Asian consumers of LNG. Of course, Japan, South Korea, Bangladesh, Pakistan, all very, very dependent on LNG.
I think it does to some extent. I think, having said that, we do expect, some additional LNG liquefaction capacity to come on stream this year, maybe around 10 million tons globally, and depending on how the European situation pans out. Now, if we look more broadly, right, we've had a fairly warm winter in in Northern Hemisphere. I think storage levels are still very healthy, and so that may be. And we've seen obviously prices dip massively, right? Come from peak to where we are today. So I think maybe if we continue this warm winter, it also takes a little bit of a pressure off the restocking season, right, come summer of this year.
Vandana, of course, the big story of 2022 was Russian crude oil coming aggressively into the Asian markets at a very discounted rate, ramped up to amount to about 50% of Indian imports and a significant amount also in China. What's your outlook for the year ahead for these new flows bedding in for a second year and becoming somewhat permanent in Asia?
Yeah, that's going to be a key story for this part of the world going into 2023. when we say more of Russian crude was coming into Asia, it was essentially just two countries, right? China and India. Now, China was always a big buyer of Russian crude, or rather Russia was a major supplier for China, but Russia was supplying next to zero crude to India right until February of this year. Now, if you look at China and India, the combined ramp up in their buying, in a good month for Russia, it was able to ship an additional up to nearly 2.5 million barrels per day more into these two countries. And what we have seen with India especially is that not only did it go from zero to starting to buy Russian crude, but ramped up very, very fast. If you look at December imports of India of Russian crude, almost a little over 1.1 million barrels per day. That's a new record for that country. So in fact, by my calculations, on a seaborne purchase basis, India imported more crude from Russia than China, because again, China gets nearly 800,000 barrels per day by pipeline. So India is now the biggest importer of seaborne crude from Russia. Now, of course, the tailwind for this was huge discounts in Russian crude, and as you were just discussing earlier as well, fell to records, close to $40 a barrel on a FOB basis for Urals crude at Primorsk in December. Now, $40 per barrel discount, and especially in a year when prices were earlier in the year hit nearly 14-year highs, was a huge advantage for China and India. So I see the story continuing. I see, India and China, we know both of them resolutely stayed away from joining the price cap coalition. And of course, now I don't think there's any chance of them joining. Russia has already passed a presidential decree as well that it will not be selling oil to countries that are part of the coalition. I think the things to watch out for on this front might be that as Chinese demand picks up, so the competition for the discount Russian crude for India will of course rise with China competing for it as well. And the other factor to keep in mind is that India has been buying all of its Russian crude completely on a spot market basis. And Indian refiners roughly import 60-40 term and spot. So they might run, if they continue to ramp up, they might run out of maneuvering room. At some point, perhaps, India may have to look at signing term contracts. But then again, the big question there for refiners and the Indian government is going to be that how permanent should they expect this shift in flows to be?
Peter, we saw in 2022 OPEC Plus manage its oil output policy through COVID and beyond, maximizing price. They call it market stability, but in terms of how they manage the market, the outcome of which was $100 average on Brent through 2022. And we obviously just spoke there about LNG, and the gas markets and price in last year were massive. And we had I think a 40-year high on the dollar strength, sort of peak yes. Dollar. All of those things combined, you would think, oh my goodness, Asian emerging markets are going to collapse. And yet they didn't. Are Asian economies more resilient starting into this year, or is the penny still to drop on all of this weight from strong dollar, high commodity and energy costs?
Well, Sean, I mean, in a lot of ways, 22 was a perfect storm, wasn't it? When you're looking at, from a geopolitical front with Ukraine and Russia, you think about price of inflation and with the dollar, and then with the crude issues and energy issues. So that all created a volatility and a wonderful trading environment over that calendar year. Now, a lot of traders are saying, I think that 23 is going to mirror image in a lot of ways the 22 story. So we're expecting big price swings, and the impact to smaller Asian economies with high energy prices. Well, they've lived through it so far, but I think the storyline is a little bit different now versus this time last year with inflation. And Australia's feeling that, and I can only put that first part on. We were expecting inflation to actually pull back, and we've just reported 7.3%, really, a big boom to the upside. So that hasn't been a positive tone, and this could be a further issue across all of Asia if they can't manage inflation, the cost is going to be greatly absorbed by the man and woman on the street. And we're expecting to see higher energy prices and a return to higher inflation.
Any concerns, Peter, across Asia with dollar-denominated debt, sovereign debt that could, we've saw in previous cycles with these same collection of issues present, that we did see defaults. What's the outlook, do you think, that one needs to keep an eye out there?
Well, you know, we're all mindful of the 1998 currency crisis. We're understanding from a sovereign debt perspective. So you're looking at, you know, how smaller nations fare and their debts and certainly repayment. So, yeah, they're all intricate parts of not only their risk management profiles, but also their currencies. And that's why we've seen, Sean, such dramatic moves. We look at, you know, major economies. Have a look. Don't talk about the small ones. Talk about the big ones. We saw a yen only a few months back at 150. Who could have imagined it? Now we're nearly at 132. We've seen, and that was just in a short period of time. Have a look at the euro. We were nudging 95 or 0.95. We're now at 1.07. The pound, only in the last few months, early September, we hit a 103.50. We're now at 122. So, you know, all of this is really
without any real changes in the macro picture. I mean,
that's right.
Is peak dollar over, or do you think there's still a revisit there?
I think it's over for the short term. I can't see it getting back to 114 compared to where it's running at 103 at the moment, unless you saw something dramatic out of left field, be it Jamie Dimon is right, and Jamie says we're going to see higher interest rates, and is 5.5 enough? So if we saw something go to 6 or 7% in US, Sean, and that underpinned US dollar, then that changes global dynamics considerably.
Well, I think, Valerie, that does bring into question a little bit again the scale of the China recovery and what upward pressure it could bring to the global inflation story with higher energy costs. You're telling me there by your earlier comment, you don't see LNG being squeezed so tight that we're going to see the same levels of pricing last year. What did you speak a little bit to the volatility that we saw in the energy markets in 2022 and your outlook for that to be a little bit calmer in 23?
Yeah, well, I think peak volatility is definitely past us now. I think that's probably a good news for the global markets, at least the global LNG markets. Our expectation this year is that prices for spot prices will kind of range between, they won't fall on a sustained basis below $25. So we're kind of predicting something in the range of 25 to 35, you know, on a sustained basis throughout the year. Having said that, I think that there are still massive headwinds, I think, in terms of kind of downward pricing risk. If you look at places like Europe, for example, I think a lot of European consumers kind of got through the worst parts of 2022 simply because government intervention, right? Governments stepped in to subsidize, kind of heating bills. They stepped in to subsidize power prices. Obviously, there's now a kind of price cap in place in principle. You know, governments stepped in to bail out. They helped LNG refilling and restocking.
But they also got through it because of China not being in the LNG spot market. I mean, that's a big part of the pain. And that pain could come now.
It could, I think, in relation to China, but our view is that 5 or 6 million ton increment that I talked about previously, that largely comes from the ramp up of existing long-term LNG contracts. So there's a scenario that we have as our base case that actually China doesn't really need to enter the spot market this year. There may be, you know, a few transactions here and there, but it's not necessarily going to come back in a big way, which also means, I think, that helps keep prices down, at least in the spot market globally. But I think the pricing support, like I said, the government intervention that has kind of been holding up the European markets, that's going to fall away very quickly, we think, this year. And then we will maybe see the real pain starting to, you know, kind of eat into the consumer.
Where do you see that, or do you see that in Asia, Valerie, in terms of LNG consumer? We saw in previous cycles not very long ago, and at much lower levels of cost on LNG, the likes of Bangladesh and Pakistan nearly going bankrupt, and unable to pay for their LNG bills. Do you see any stress on those issues going forward?
Yeah, I think unfortunately for countries like Pakistan, Bangladesh, that pressure still remains on two fronts. One is that simply even at current LNG spot prices, they are unable to import and afford those kind of prices. And what they have existing on long-term contracts, which are okay, right? And they're still taking deliveries of those. It means that there's still not enough gas in the country, right? So that also maybe puts downward pressure on, it basically puts energy or electricity supply rather at risk. And if you think of countries like Bangladesh, for example, garment manufacturing is a huge part of the economy. If you don't have power supply or you continue to suffer power blackouts or brownouts, that's a massive stress on the economy. So in addition to what we talked about in terms of the strength of the US dollar.
I want to give our last section of comments, our panelists, a sense of a really sharp focused outlook for the year ahead in the Asian energy markets, supply demand, and ultimately where, OPEC plus looking at the return of the opening of China, should they reverse their oil cut from last fourth quarter, where about 1 million barrels was taken off the market in a 2 million barrel a day cut, but physical barrel. Where do you see the year ahead, specifically for Asian energy markets, supply and demand? Vandana, your thoughts?
So we estimate China lost about 500,000 barrels per day of demand on average in 2022. We do expect that to come back. As I mentioned earlier, I know you've been talking about potentially a year of two halves. I think it's more likely to be a first quarter and the remaining 3 quarters. So I expect Chinese demand to start coming back in the second quarter of this year. Of course, all of it will not come back. I think it will be probably in 2 tranches, if you will. So I expect a lot of the pent-up demand, especially from traveling, and that points to more jet fuel usage for one. That alone could return close to 250 or to 300,000 barrels per day of jet fuel demand, simply within domestic travel and international travel to and from China, both for tourism as well as business purposes. So I do expect Chinese demand to recover the 500,000 barrels per day lost last year. It will start, I expect, but the second tranche of Chinese demand recovery is really when does Chinese economy actually pick up momentum. So we move from just simply recovering the lost demand of 2022 to actually going back into growth phase. I think that happens more towards the end of this year and flows into 2024. If you look at India, a very different story, of course, from China. Indian oil demand consumption jumped by nearly 9% year on year in 2022 to an average of about 4.7 million barrels per day, and that put it above the 2019 level. So Indian recovery was very strong, but going forward, I expect Indian demand growth to moderate more to like the recent historical average of like 2 to 3%. So I don't expect that spectacular growth in India to continue. Another thing to bear in mind, because people tend to talk about China and India demand growth in the same breath, is that India consumes 1 out of every 3 barrels that China consumes. So even so 2 to 3% growth for India is a very modest, about 150,000 barrels per day in absolute terms. What should
you have any sense of where you put the oil price on Brent for the year ahead?
Yeah, sure. So we had Brent average, let's say it was about $99 a barrel in 2022, up 40% year on year. I would expect the average to be closer to 80 to 85 this year.
Peter, your thoughts and outlook for the year ahead from an Asian perspective?
Well, I think for first, I'm building on both Valerie and Vandana's points. I think first off, Sean, we think that crude will probably edge even higher than that 80 to 85. We're at 80 now for Brent, and I think they're very, very achievable 90 plus. And I won't be surprised to even go closer to that 100 mark. I just think that this year is going to be a very volatile year, not only for production, but more importantly for the overall general world health, economic health. And I think that it's really going to paint a picture of higher prices, and the impact to currencies and commodities and certainly to countries is going to be felt all across Main Street. So
even with prices, IMF forecasting 1/3 or more of the global economy to go into recession.
Yes, I do believe that. I think the inflation story isn't under control yet, and I wouldn't be surprised to see higher energy prices. So we'll go out there on that one. And the second point is, and I'm conscious as far as those forecasted numbers, but yes, I think there's going to be a lot of pain this year. I think volatility, and it's a year to probably reflect on 22, and I think 23 will be wilder than what we saw in 22, Sean.
Do you share Valerie's position that we've passed peak volatility, Peter?
Yeah, not necessarily for base metals, not necessarily, I don't think, for currency fluctuations. I think that's going to remain, Sean, and certainly not for inflation. After getting that read in Australia today, we're conscious that, and if tomorrow's number is worse than expected, I'm going to say it's going to go with consensus. But if it hits the scale the other way, Sean, then it's game on, and I wouldn't be surprised to see big moves from the Fed and central bankers globally.
Valerie, your thoughts and outlook. We have another LNG analyst with us today who's forecasting 15 million tons of demand growth out of China. But your thoughts as to the year ahead from Asia's point of view, particularly those vulnerable outlooks.
Sure. Yeah, so I think we're nowhere near that optimistic, I think, on China. That's kind of point one. I think overall, we expect overall Asian demand this year for LNG to be flat. So kind of in order around 255 million tons for this year, which is similar to what we had last year, which still represents a drop-off from the 270 that we saw in 2021. So we think it's a kind of a year of steady state growth. I mean, despite some incremental growth in China, we think South Asia in particular will not be able to afford the new LNG imports rather. We think Southeast Asia is going to be a fairly flat year. So overall, pretty much a flat demand going forward. So I think, yeah, so overall.
On that point of, I was just going to ask you, we've seen the year start where JKM, the Asian LNG benchmark, was at a premium to the European price point benchmark on LNG. Would you expect that trend to continue through the year? And where would you see JKM averaging?
Yeah, so I think one for us, I think the JKM and TTF, right? Throughout most part, I think there's going to be a reconnection of the two, right, to more kind of long-term normal levels, and that's in line, I guess, with our theme that this year peak volatility in the energy market has probably passed, right? Europe's got a few more supply options now. They've got more capacity. Some of the constraints on the UK to continental pipelines, that's going to kind of ease. So if that thesis is correct, right, there will be a reconnection of not only continental prices and the UK, but also within the kind of cross basin prices, right? Meaning the TTF, NBP, and JKM. So hopefully, right, things come down a little bit in the energy markets this year. That's a hope, of course, and then we get some stability, and we do expect that from 2024 onwards that we do see longer term recovery in Asia in terms of LNG demand as prices continue further moderate.
Well, we're going to have to wrap up the Asia Energy Markets session there. Thank you so much, Vanda Nahari, founder and CEO of Vanda Insights, Peter Maguire, CEO of XM Australia, Valerie Chow, VP, Head of APAC Gas and LNG Research at Wood Mackenzie. All three, of course, regular commentators on the Daily Energy Markets podcast. So we'll hear them through the year to see how these forecasts stack up. They'll be held to account. But until then, thank you so much. We're going to take a short break. We'll be back at 10:30 UAE time as we move into the Middle East section of the UAE Energy Forum with interviews and panels on all of these subjects from a Middle East perspective. Thank you very much.
Thank you.
Thank you, Sean.
Thanks, Sean.